You've seen the countless commercials and advertisements encouraging you to buy gold, but why is gold such an attractive investment in today's economic climate? The best way to explain the future potential of gold is by concentrating on what we use to buy it with, a US dollar. We generally think of a US dollar as a standard piece of currency that hasn't changed since its introduction. But if you take a look at the top of your money, you'll notice that it reads Federal Reserve Note. This title tells us a lot about the money we use. The Federal Reserve is a central bank that has authority from an act of Congress, but not the Constitution, to create money. In fact, the Constitution specifically states that Congress will coin money in gold or silver. Obviously, this incredible amount of power is greatly abused. The Federal Reserve, along with the bureaucrats at the Treasury Department, frequently increase the amount of dollar bills in our economy. When more money is chasing an unchanged amount of goods and services, the price of those goods and services increase. We call this price inflation. The US dollar has gone through several changes throughout American history, which explains why the price of gold has not increased at certain times. From 1834 to 1862, dollars were backed by gold, which made it incredibly difficult for gold to increase in value against the dollar bill. During the Civil War, we abandoned gold so we could inflate our money to pay for the cost. And no surprise, the price of gold rose. In 1878, we got back on the gold standard and continued this practice with several variances and attempts to fix its price. By 1971, we officially left the gold standard and went to a fiat money system. This means that the dollars we use no longer are backed by gold, silver, or any particular asset. This fiat money is the Federal Reserve Note that we are using today. Since 1971, gold has increased by over 3,000% when priced against the US dollar. It's important to understand what this really means. Unlike stocks, which increase in price due to the growth of corporate profits, gold for the most part increases in price due to the devaluation of our money. When our federal government fails to balance a budget, the Federal Reserve creates credit out of thin air in order to fund government operations. Since the supply of gold in the world does not increase at the same level, the new dollars drive up the price of gold. Another way to look at this is by stating an economic law that has lasted for thousands of years. Gold is money. In order for people to exchange goods and services, a commodity that is widely accepted throughout an economy must be established. Otherwise, individuals are left with bartering, and that creates shortages. Gold is the most heavily used commodity in the economies of world history. Most humans value the metal for its attractive qualities, and more importantly, gold cannot be recreated by a chemical process or by running a printing press. It must be mined out of the earth. Unless the United States abandons its current monetary policy practices, gold will continue to rise in price, which is why gold remains an important part of an investor's portfolio.